What do you make of the financial stability in the US at the moment, the worry over regional lenders?
Yeah, I'd say what's happening is on the back of the challenges at Silicon Valley Bank and First Republic. Consumers are really, it's a movement to quality. It's a movement to trust. They want to go places that they can trust the brand, trust the company. One of the things that we've seen at SoFi is that our members trust us greatly, not just with their checking and savings needs, but their needs more broadly, whether it's their credit card or their brokerage account or buying a home or paying for college education or refinancing. We just posted our 8th consecutive quarter of revenue in yesterday with 46% year-over-year growth, $460 million of revenue. Those 8 consecutive quarters of record revenue performance reflect the trust and reliability that we're delivering for our members. That said, we've also continued to increase the benefit that they have. We now provide $2 million of FDIC insurance through a partnership so that not only are we providing trust, but we want to continue to increase their reliability and the confidence that people have. And that's what's led to such our strong results across the board, both in revenue and EBITDA growth, as well as positive margins.
But Anthony, they're worried about your forward-looking guidance on EBITDA growth. And is that competition in any way? Because you have a banking license, but a lot of the other online lenders, neobanks, are doing well with just banking partnerships. What do you make of the space you've made for SoFi when the market is worried? Or maybe it's just profit-taking?
We raised our outlook, actually. We increased our revenue guidance for the year. We also increased our EBITDA guidance for the year and reinforced our view that we'll be GAAP profitable by the fourth quarter. Our bank, which is a subset of our overall company, is already GAAP profitable, and we had really strong margins there of 20%, really strong return on tangible equity of over 20% as well. The outperformance that we had in Q1 on revenue, we passed through and raised it for the full year. We also raised EBITDA. We have a lot of leverage in the business. Our incremental margins, which is the change in revenue that drops to the bottom line, was 40+% for net income on a GAAP basis. And it was also.
But they are worried about your EBITDA.
Yeah, it's growing quite dramatically. We had 16% EBITDA margins in the quarter, up from 6% a year ago. And our EBITDA is now greater than our stock-based compensation for the first time. And we're on the track to be GAAP profitable by the fourth quarter and generate really strong returns.
Anthony, let's go back to the travel news. Is this you trying to win business from American Express in the Chase card business?
Yeah, our value proposition is that we want to be there for every one of the major financial decisions in your life and all the decisions in between every day. So we want to help people get their money right by helping them borrow better, save better, invest better, protect, and spend better. So this is our first foray into helping people spend better outside of just financial services products. So we launched SoFi Travel with Expedia to give our members great value in their travel choices, great selection, great ease of use, and most importantly, great prices that are even better when they pay with SoFi and they use their reward points and they actually generate reward points with us. So we're providing what they could typically get someplace else at an even better price, so they're spending better with us. We'll look to do this in other categories like entertainment and other types of things like sporting events, et cetera, that are high ticket purchases to give them a better way to buy with a better currency of our reward points and our partners that are providing discounted inventory.
Anthony, Bloomberg is tracking closely the litigation against the Biden administration's decision to pause the student loan program. I know that has had some financial impact to you. What's the latest there?
What's really happening is in the courts, and we can't really comment much on it, but it will go through the typical process with the courts with different filings and different motions. We think it's the right thing to do for our country. It obviously is something that would benefit SoFi as a business as well, but I actually think it's the right thing to do for the student loan program. College is not going to be free. Whether student loans are forgiven, and we're supportive of targeted forgiveness of student loans or not, people that are going to college today still have to pay a significant amount of tuition, and they're going to need financing. SoFi is one of the companies that can provide that. But there's a number of companies in the ecosystem that haven't been able to withstand what's happened over the last 3 years, and they've dropped out in helping people pay for their college or refinance their college. As I mentioned, we've had 8 record quarters of revenue in a row, 3 record quarters of EBITDA in a row. Our bank is profitable and driving great returns. That said, we'd be doing even better if we could provide our members with the right types of services to pay for their college education or to refinance it. And what the
Yeah.
administration has done is put that on hold without a necessary amount of spending, about $5 billion a month that could be better used on people that need it and that are in despair, which is where it should be, as opposed to those that can pay.
Anthony, 30 seconds, no more. Is it worth the PR hit? Because people say you're just profiteering.
Doing the right thing, the harder right or the easier wrong, is always the way we're going to go. Even though it may be viewed and scrutinized, it's the right thing that we needed to do for our company and what we think is the right thing for our country.